Welcome to Spidell's California Minute. I'm your host, Catherine Sedan. This week we're covering the purpose of the economic nexus thresholds when taxpayers who fall below the thresholds are still being determined to be doing business in California. Register for the best year-end update and be prepared to tackle tax season with Spidell's Federal and California Tax Update. We have in-person seminar and live webinar options available, and you can find more details at spidell.com. Ever since California adopted the corporation, franchise, and income tax economic nexus thresholds, the top question raised by tax professionals and businesses alike is, if a taxpayer's payroll, property, and sales fall below these thresholds, does that mean the taxpayer is not doing business in California? Recent Office of Tax Appeals opinions once again remind us that, according to the FTB and the OTA, the answer is no. For purposes of the corporation franchise tax and taxes imposed on other business entities, such as the LLC gross receipts fee and annual tax, an entity is doing business if it meets either of these tests. The entity is actively engaging in any transaction for the purpose of financial or pecuniary gain or profit under RNTC Section 23101, subsection A, or the entity meets one of the economic nexus thresholds under RNTC Section 23101, subsection B. For the 2025 tax year, a business entity has economic nexus with California under Section 23101B if it satisfies one of these tests. The entity is organized or commercially domiciled in California. The entity's California sales, including sales by an agent or independent contractor, exceed the lesser of $757,070, or 25% of the entity's total sales. The entity's California real property and tangible personal property, valued at their original costs, exceed the lesser of $75,707, or 25% of the entity's total real property and tangible personal property, or the amount paid in California by the entity for compensation exceeds the lesser of $75,707, or 25% of the total compensation paid by the entity. Falling below the economic nexus thresholds does not provide a safe harbor from the financial or pecuniary gain test. In fact, earlier this year, in Appeal of Metro Mortgage Group, the OTA held that an out-of-state business whose only connection to California was $121 paid to a part-time temporary employee residing in California was sufficient to meet the financial or pecuniary gain test under Section 23101, subsection A. Even more recently, in Appeal of Diet Standards, a Florida taxpayer that participated in Amazon's Fulfillment by Amazon program was found to be actively engaged in transactions in California for the purposes of financial or pecuniary gain or profit. That taxpayer maintained a maximum of $2,333 of inventory in California during the tax year at issue and made less than $14,000 of sales to California customers. The OTA held that the taxpayer was doing business in California and was required to file a California return and pay the $800 annual tax, even though these amounts fell below the economic nexus thresholds. In light of these decisions, many taxpayers and tax professionals are questioning the purpose of the economic nexus thresholds if taxpayers are still found to be doing business under the financial or pecuniary gain test, even though they're below the thresholds. Unfortunately, it appears that the thresholds may only benefit the FTB, because once a taxpayer is above the thresholds, no further analysis is required and the entity is considered per se to be doing business within California. However, taxpayers that are below the thresholds that have minimal payroll, property, or sales in California will likely still be found to be doing business in California under Section 23101A. This means they'll be required to file a California return and pay at least the $800 minimum franchise or annual tax. Failure to do so can result in significant penalties, especially for LLCs and S corporations that may be subject to the per partner or per shareholder penalties. We cover this issue in more detail in the January 2026 issue of Spidell's California Tax Letter. For details on this monthly subscription and to download a sample issue, go to spidell.com and click Publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.